If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randal. Let's dive in.
Hey, welcome back. I have a show today. We're talking to Drew Pierce, and we're talking about short-term rentals, his scale up in what he's working on, and now a really cool project that he's working on in the Smoky Mountains. So if you're interested in short-term rentals, or you're interested in investing and figuring out what returns kind of look like on short-term rentals, this show is for you. Drew lays out at the very beginning a ton of the tools that he uses and how he focused down into single markets and the amount of work that he had to do in order to get to the markets that he's buying and operating in. So again, that alone is a ton of value add that he had. So I really appreciate that he is willing to share how he has structured some things in his business. I feel like you're going to get a lot out of that show. So please, if you're getting value, go on, rate and review wherever you're listening to this. Give us some comments in the review. It helps us a ton to get awesome guests on and to bring you some value so that you're able to go and turn your commissions into cash flow. Here we go. Let's talk to Drew. Drew, it's awesome to have you on the show, man. Thanks for joining me. I'm excited to talk to you today about what you're doing in the real estate space and short-term rentals in particular, because that's your deal. So why don't you go ahead, for those who don't know you, tell us a little bit about yourself and what you're working on right now.
Sure. Yeah, thanks, Randal, for having me on the show.
Sure.
I'm excited to be here. So what I do is I do short-term rentals specifically. So what I do is I partner with investors, and I'll go out and I will do all the research to figure out where's the best place to buy the property. I'll actually go out and build the team in that area. I'll design the property, remodel it, the whole 9 yards, and then I will actually manage the property after it's all been said and done.
Do you focus only in the Utah area, or is this everywhere?
I'm actually don't have any properties in the Utah area. That's a really common question that I get. My properties are actually in the Smoky Mountains of Tennessee and in the Orlando, Florida area.
Got it. I'm going to Orlando tomorrow for Disney World. My wife and I are literally just back and forth just now. Like, do you have the app? Do you have this? So, yeah, if I knew you like 3 weeks ago, maybe we'd stay at your place.
Yeah.
So it's interesting. I hear a lot of people talking about the Smoky Mountains. Like, how is that a thing, and why is that a hot spot?
It's been a hotspot for a long time, but really it became with Dolly Parton. That when she grew up, there was nothing out there in Pigeon Forge, and she's turned it into this huge hotspot for vacationers to go out there.
Got it.
Like, she owns the entire town, basically. She has Dollywood out there. She owns all the dinner shows. There's now all your basic touristy type of things that you'd see out there. But what you mostly go there for is the scenery. Is just for the Smoky Mountains. It's just it's by far the most visited national park. It has more visitors every year than like Yellowstone and the Grand Canyon combined.
Awesome. Okay. I mean, we went when we were kids, but yeah, I haven't been back. Good to know. And Orlando obviously is a hot spot. So curious, and how are those the only spots that you will work with investors or people you're trying to work with? Because again, you're doing a turnkey situation. So if I came to you, I'm in San Antonio, I was like, hey, I've got a place in Austin I'm looking at. Would you establish an entire setup there, or you only focus in those two areas?
No, I can establish anywhere. That if they already have a property in place, that is one of the things I do, is I do manage other people's properties if it fits the brand. But no, I can do it anywhere, really.
Got it. Okay. So let's talk to that. How have you been able to set that up to manage from afar? What's the process of doing that? Again, if somebody's listening, they're like, oh, that sounds awesome. I'm not in that city, but how would I even go about doing it? Or is it, I don't know. Honestly, it's one of those things, like, you already do it. You have the playbook, but if somebody's trying to mimic you, like, what would you recommend they do?
Yeah, it's actually a lot easier than you think. A lot of people are afraid to invest or manage anything outside of their own backyards. Like, I want to live within 20 minutes of where it's at. I want to be able to go fix the place, look at it myself, this or that. But really, it comes down to just having good, reliable people and systems and processes in place. So it starts first with making sure, obviously, you have a good property to manage, but then you got to get the right property management software in place. So I personally use HostAway, But if you're just starting out, I'd use something like IGMS because I believe they are free.
What
At
is it
least it
called?
was back in the day.
IGMS?
IGMS,
Okay.
IGMS.com. They will automate all your messages for you, send it out to the guests, and we'll sync up with the different OTAs, online travel agencies, booking channels, like Airbnb, Vrbo, those guys. And it just works very smoothly with that. And then the next thing you're going to want to get is cleaning software. I recommend Turno for that because that automates the scheduling. And also, when you're just starting out, you can't build your own cleaning crew. There's just not enough work, consistent work for them. But a cleaning company that fits for them. Like, yeah, I can add another 1 or 2 properties to my portfolio. That's fine. And they have a marketplace on Turno.
Turno.
Yeah, go ahead. What was your question?
That was it. Like, how do you spell it? Turno.
TURNO.
Okay. All right. Turno.
Yeah, they used to be called Turnover B&B.
Yeah.
And I guess it was just too long, so they
Yeah.
shortened it to Turno.
Yeah, makes sense.
But they'll automate the entire process for you. So whenever a guest checks out, automatically schedule the housekeeper to go there and clean the place for you. They can upload pictures, checklists, all that type of stuff. But the biggest thing is that automates the payments and their tax forms at the end of the year.
Okay.
So it just makes it super simple like that. And the last thing I would recommend is to make sure that you get pricing software, dynamic pricing software. So something like Wheelhouse, or that's what I use personally. And then there's also Beyond and Price Labs as well. They're both popular. Those all work really well because a lot of people have no idea what to do for pricing, especially when they're first starting out. And so that automates the entire process for you, lets you know exactly what you can charge for the place. And then it obviously makes adjustments as time goes on. If you're getting lots of bookings, it'll increase your price. If you're not getting any bookings, it'll decrease your price.
Yeah. That's awesome. Okay. Like solid tips already to just set up that business. You said key processes. So that includes some of the software, the platforms. Well, those are systems really. So what about people? Like, where are you finding I guess the cleaners are all through Turno.
Turno, yeah.
Yeah. And then who else do you need? Like handyman, like what's happening? How do you automate the maintenance requests and that sort of thing when you're not in the city?
Yeah, so there's 2 easy ways that I can do it. And the first one is most of the cleaners have a handyman that they work with and recommend. Okay. So that makes it super easy and convenient that way. And then another way is just to find people on Facebook. Just go to a Facebook job group. Mm-hmm. And, there's usually tens of thousands of people on there, and you just say, hey, I need a handyman. And you will get 10 to 20 people responding saying, I can do it. I can help. I have the experience and blah, blah, blah.
Okay.
So it makes it really easy.
Yeah. So all right, then let's talk not logistics, but I guess specifics for your company and how you guys are set up and structured. Is it you and a partner? I know you co-founded Sage. So how many people do you have to have in order to manage this, and how many properties do you guys have?
So it's basically just me at this point, as far as like the management perspective of it. But I do have a small team. I have people who handle the guest communication, someone who handles the maintenance virtually as well, to make sure they send people and coordinate all that.
Yeah. And
then I have housekeepers. I have my own crew for that. Okay. In many of the places. And then that's it as far as people is concerned. I'm sorry, I forgot what the other part of your question was.
It was just like, how many units are you working on right now? Like how many can one man handle?
Sure. So, most of my time is spent on growing and increasing revenue and things like that, optimizing the business. But if I really wanted to, if I just wanted to float, I could do it all myself. And there's about 12 units that I have in the portfolio. So
okay. And are those all? So I know a lot of guys that I talk to, at least locally, and through this podcast, they will manage for others and then they have their own. So are those yours or are they others or a combination?
I personally own 7 properties, and then I manage the others.
Okay. So let's talk about the evolution then. How did you get into this in the beginning? Like, you seems like you traveled to one, you saw it, you're like, oh, this is great. I want to redo this. I want to recreate it. So what was the 0 to 1? Like the first deal that you bought, and how did that even come to exist?
Yeah, absolutely. So you got it right. Basically, my family and I went and traveled with another family to a place in St. George, and And this is something that I'd always wanted to do. I always thought that, but I wanted to be on the investor side of it. I just thought, one day when I'm quote rich, I'll buy a property, a vacation home somewhere that I wanted to be and use it for myself whenever, and rent it out whenever it's not being used, or whenever I'm not using, I mean to say. And yeah, basically I just saw what they did and I was like, I don't need to wait for this. It was just kind of like an aha moment. It's like, no, this is like the right time to do it. And this is in 2019 when it was growing and booming, but it was still, relatively speaking, in the early stages. It's not a very, like, it's a much more mature market and industry now than it was just 5 years ago. And so at that point, I actually got serious about looking for investors. I went and I could think of, and I garnered a lot of interest in it. And I ended up having to strong arm my parents into being the very first investors that I ever had, because they had just sold their business that I helped build for them, and just said, like, you have all this cash, let's do something with it. And they were really nervous about it. And like I said, I had to leverage like other people. Like, if you don't buy this house, like I have these other investors, and it was all real. Like, other people were interested in doing it. And but eventually they were the ones to be the very first investors that I had. And so we just found a property out and just did a whole bunch of research to figure out, the best research that I knew how to do at the time without any real experience, saying like, where's the best place to invest? And I found that Gatlinburg, Tennessee was the best place at that time. That name just kept coming up over and over and over again. And then I found a place that seemed like it would generate about a 25% ROI for the investors, in this case, my parents. And so we just pulled the trigger on it, and the rest is history, as they say.
All right. Now let me ask you then. One, where did it keep coming up? Where did you do the research? Like, well, maybe the better question is, if somebody were starting today, what research should they do to find that location?
Sure. So at the time when I was doing it, it was not very sophisticated. I was just going on Google, trying to find the top places to invest, and using, random people's like Forbes list, and as great as some of these resources are, they're not in it, they're not living it. They're just doing their own research and just saying these are our findings, type of a thing. The best place, the way that I do it today, which I'd recommend doing it for anybody, because it takes a lot of time, but it's worth the time investment. And I make a list of about all the vacation rental destinations in the country currently here in the US. And my list consists of about 900 cities. And then what I do is I go in AirDNA, and then I look and see what their travel score. And on the travel score, it'll say different things like, is it growing? And if the market is growing, is it still getting booked up? So it kind of tells you what the saturation is like there, or if it's a growing market. And then from there, I just gauge basically from a general ROI perspective in each one. So I just look at like what the basic home prices are for that area, that market, and then what also is revenue is being generated on a per house average. And then from there, that takes like 6 hours to do a focused work. And then I'll actually narrow it down to say my top 10. And I like to invest in bigger markets, by the way, rather than smaller markets. It's a bigger investment if you want to invest in a market that makes it a destination, because you have to draw people in. You have to invest a lot of dollars into like Instagram advertising, and really it's a process to do that. Whereas if you're just getting started, it's better to be in an established market that people are already trying to visit. So that's what I like to do, is go into about places that have about 1,000 rentals already, have a rental score of 80 or above, and then I start narrowing it down and saying, okay, like the general ROI says it's this, but let's start looking at it closer. And then you start weeding those out, because a lot of times they'll say, oh, the average house is only $200,000. Well, you realize that the places that are zoned for short-term rentals, for example, those homes are actually $600,000 type of a thing. And so you just kind of go through that until you filter it down to about 2 or 3 markets is all you're going to be left with after having 900. And then you start narrowing it down by the neighborhood. And AirDNA also has a great resource for that. It's only like $100 or something like that. You can rent, or you can purchase it for all the data that they have on that particular city. And it will show you things like where the top performing properties are listed at. And then so that way you can circle it, go to realtor.com, use their circle tool type of a thing, and just look to see what properties there actually match what it is that that's going to fit your parameters for what's going to be a good investment.
Yeah, man, solid breakdown. Like that's awesome.
Yeah.
Ton of value in that process that you go through to narrow those down. So I assume you've done all that work and you've narrowed it down to those two markets, and that's where you're buying and doing things.
Yeah.
Shortcut.
At the
all
time
right?
that was,
Okay.
exactly.
Okay.
That was a shortcut. Yeah. That's actually what's funny is I get people who were interested in investing with me and then they decide, you know what? Because people who invest with me, they're silent partners. That's kind of one of the rules. I don't want too many cooks in the kitchen.
Yep.
And so I just tell them like this, and then they decide, actually, I do want to be involved. My wife wants to design and things like that. And so they'll find out where I'm buying, and we'll just buy one down the street.
Yeah.
From
Yeah.
where I'm at.
Right.
That's happened a few times.
Yeah. Are they investing with you and doing that?
No, they just
Oh,
they
yeah.
said, all right, well, I saw Drew just bought here, so I'm going to buy one over
Yeah,
here.
there you go. There you go. Okay. Well, let's talk about the investor side of it, because you said 25% ROI to your investors, which were your parents at the time. I don't know. Is that still the metric that you're targeting for people investing with you? And is that annually, or what is that?
That is annually.
Okay.
Yeah, that is annual investment. So how it works, I guess it'd be good to give you some background as to
Sure.
how it works and how I come to that number. So when people invest with me, what they do is they say, here's $100,000. That's the minimum to invest with me at this point. And then I go, like I said, I do all the research, buy things like that. And then what we do is we split the revenue minus the essential expenses 50-50. So that what I call like the gross profit. So the essential expenses are things that are pretty obvious, like the mortgage, the
Taxes,
supplies,
insurance.
the cleaning, that type of stuff.
Yep.
It's all kind of part of that. What I take on though is the maintenance side of it, and then also the anything that's administrative in nature, I pay for. And so as a result, and it kind of works like an annuity. So where if the property for whatever reason isn't profitable, I eat that cost. So they invest the money once and then that's it, type of a thing. And so their ROI, like my parents' ROI will still hover around the in the 30+% range after all this time, even though obviously the market's gone up and down since then. But there was a point where they were making 45% ROI at this point. Buying a market property today, I would likely, once I'm done with the current project and I'm going back into like say vacation rentals, things like that, I don't know if I'll be investing in those same two markets again. It just depends on where the data is taking me right now. Because as of right now, I wouldn't be getting those kinds of returns in the Orlando area or maybe even in the Smoky Mountains area.
So what's a gross typical ROI on a property then? Because if you're targeting 25 plus to the investors that you have, you're obviously making money in there somehow, some way. So what is the property performance rather than the return performance to investors?
So how much revenue basically are they bringing in?
So if you're paying out 25%, is that property producing a 50% ROI and you're getting 25% after expenses?
I'm not getting a 25% return at the end of the day because like I said, I still have to pay the administrative and the maintenance costs with it. Also any upgrades with it. So like I invested $30,000 just recently into one of my properties that's in Orlando, where it was to make it just to take it up a notch in terms of the Neverland theme for it. So I reinvest pretty much everything I have back into it.
Yep. If on like a multifamily deal, it's the easiest thing I can think of right now. There's a return to the investors, right? I'm targeting that. I want to pay you guys 15% AAR or whatever that number is, right? Over the term, the average annual return, right? That's what I'm targeting to the investors. But as the operator, I'm still making a return on top of that. So the property itself has to produce better than that 15% average annual return. So I'm saying in general, what are you seeing as a return from the property?
Like before the payouts?
Yeah,
before
exactly.
The payouts and things like that? That's a good question. I would say it is closer to 50 to 60% sometimes. That's on some of the older properties. Yeah, I have. And then on properties that have been producing the last couple of years, it's a lot lower. It's going to be closer to like 20 to 30% range. Yeah. Type of a thing.
And so, so you personally may be seeing like 5% of gross, something like the 5 to 10, depending on what that is producing. On the older properties, if you're paying out 25 plus, I mean, it could be a lot higher than that for you.
Right.
Okay. Yeah. Just trying to figure that out because I'm a broker. I've been flipping house for a long time and I've looked at the short term, midterm, sort of thing. And I've had a number of guests come on and talk about it. And I still haven't pulled the trigger. Not sure why, just haven't pulled the trigger. It's like, I love the idea of having the vacation home, but I kind of felt like I've missed the wave. And through COVID, everything got so expensive that I don't know, right? You're talking about moving out of these two markets you've been in since you started. And so, yeah, what are you looking at now for these, for the next, the next phase, I guess? You said you have two projects that you're wrapping up right now. Is that what I heard?
I'm working on a project right now. It's actually in the Smoky Mountains, but it's a glamping resort. That's where I see everything is moving towards, and honestly, that's going to be a very short window of opportunity. Because on those properties, for example, my cabins in Tennessee, they're studio cabins, 600 square foot cabins. Those each produce anywhere between $80,000 to $100,000 a year. They're in the Smoky Mountains. Okay, these tents will cost a fraction of that. Okay, my cabins today are worth, I bought them for about $200,000, and before they're worth over $450,000 at this point, 450. I can buy a tent though, completely furnished and everything like that, for $45,000 and generate about $50,000 worth of revenue. Okay, so that's where I feel the opportunity is currently is with the glamping.
So is it like a yurt? What is this thing?
So it's canvas safari style tents.
Okay.
Is what I'll be doing with them. There's a company I use called Yala, and the distributor I'm working with is Tent Masters, but they're very high end tents, so they're not like your Coleman tents at Walmart.
Sure.
Right.
Yeah,
they're specifically made to just have an amazing experience. So you go in there, it'll be like wood floors on it. It honestly, it's like a cabin, but with canvas walls. Like it has AC, a little kitchenette in there,
nice,
and things like that. The only thing that's not going to be provided is I'll provide internet, but probably not the TVs, type of a thing, just to make it so
use your phone, use your tablets or whatever.
Use that if that's what you really want to do it. But the whole point of it is people are there to enjoy the nature with still the creature comforts. Yeah. And so that's kind of the idea behind it.
Ages ago, I took my son, he was a 2, and I took him to locally here in San Antonio. A lady had a yurt. I mean, it was like one of those domed things, right? And it was an Airbnb. It was set up on there, and it was awesome. It was a very cool place to go hang out. So I kind of have an idea, but I'd be curious to see what those are that you're talking about. So honestly, like I have a lot of people on, and they don't go through and break down everything like you've just broken down. And so I appreciate the willingness to share and like, hey, this is what I'm doing. This is exactly the platforms that I use. So maybe let's talk a little bit more about that, like how you have structured this thing and what you're looking to get into, right? So is the glamping, is that the property that you're working on? Are you trying to have 5 of these tents set up on one property? Are you, like, what does that even look like?
So I guess to give you a breakdown of where the project and everything that is coming from. So I bought 42 acres worth of property. It's one of the only places left in all of the entire Smoky Mountains of Tennessee that you can buy any piece of land with it whatsoever. And right now we're having a battle with the government there. It's on county land, and I just know the local government there is getting involved in trying to limit the number of properties that we can have on it. And so that's kind of the headache that we have right now with it, is that they're trying to tell us we can only have 31 units on this, which is obviously just 31.
Okay. Yeah.
Yeah, on 42 acres. So obviously less than an acre per tent, or more than an acre per tent.
Yeah.
And that's just absurd. So we're trying to figure out what to do. And the hard part is that I'm just dealing with a lot of, it's just, at this point, it's trying to find the right team. I have a really good GC. He's the number 1 GC developer in the area, but we're having a hard time finding an attorney that can make this work for us. I'm the only one coming with ideas. So we're going through on our 3rd attorney now. I say, like, why don't we do this? Like, oh, I don't know. And this is outside their expertise. And so they recommend me to someone else, and they don't know anything about it. So I'm just getting shuffled around with it to try and figure out what we can do. So like, I've had a couple of ideas. Like one of them was just like, hey, let's get like, what's the smallest amount of land that we can legally build on, right? Put a permanent structure on it. Is it like a 1/10 of an acre? If so, then let's do that. And then that way we can have like 200 tents on there type of thing and make it grow that way. Or if they're really going to say, no, that won't work, and they say, okay, well, Airbnb, one of the common things on there is that you can rent out room individually. So I'll sell it to the government there. It's like, I'm just going to put 31 large cabins on it and then basically rent them out as a boutique hotel.
Yeah.
Where it's just like, all right, each of these, Airbnbs are going to have 20 bedrooms and people can rent them out individually. If you want them to be an indoor pool, it'd be really nice and things like that.
Yeah.
Sell it more as that. So I'm just trying to figure out what is the best way to do it.
Yeah.
And putting together the right team for that.
Yeah, that's awesome. So, all right, so 42 acres, you bought it. How did you know that this was going to be the spot? And did you like going into it knowing these challenges? Because land development in general is in a county, most of the time, if it's unregulated, you can do whatever you want. So
Right.
when did this become an issue? And
it became, so we did a lot of research before we even got started
Sure.
to figure out. And they said, everyone I talked to said the same thing as you. Like, there's a lot less regulation when it's owned by the county instead of the city. So that's specifically why I bought this land.
Yeah.
Was for that reason. And the regulation didn't come, or government didn't start stepping in until we were starting to get approval for things like the utilities and getting all that stuff set up.
Yeah.
And trying to figure it out, because there's already like a piece of road going through it. It was a failed development from before. And so it was supposed to be a quick project, but it hasn't turned out to be that easy. But we'll figure it out. But that's when the regulations, the government started stepping in, was after we had already purchased the land in full and said, we're gonna limit you the number of units that you can have.
Do you know what's your break even number of units? Like, how many do you need to make the project work?
I mean, I will break even at the 31 units because the margins are so high. On those 42 acres, I only spent $585,000 on it.
That's awesome. Yeah.
Yeah. So and like I said, there's the road itself that was put in the middle of it would have cost $1 million. Anyway, so we got a real bargain.
Like a paved road?
Yeah, there's a paved road with curbs and
oh wow,
all that type of stuff.
Oh, okay.
So
I'm picturing like a
gutters.
rural piece of property that has no development on it whatsoever. Did they already put utilities in the street?
No, the utilities are not in the street, so that's the only thing. So there's a paved road there and it's curbed, but there isn't. There's nothing else to it.
Yeah.
So it's somebody who had a this idea that they were going to put cabins up there, and then it failed, and so now they're just selling the land.
Hmm. And wow, so why did the first one fail? Same reasons?
No, they couldn't raise the money.
Got it. God, that's crazy. Put the damn road in and not have the capital. It's like
I don't know. I don't understand that. Why get started with it if you don't have the money in place?
Yeah,
but it is what it is.
So let's talk about the project then. Let's assume that you're going to get, I don't know, 3 per acre or whatever it is, right? So you get 100 something units in there, 2 per, whatever that number turns out to. What's the total project cost you're estimating, and how are you structuring the deal? Like, for investors, how much capital are you trying to raise? Like, where are you with that?
Sure. So right now it's set up to be a waterfall syndication.
Mhm.
So it's going to be, I guess just for your listeners who don't know what a waterfall syndication is, it just means basically you have to hit hurdles. There's like 3 different hurdles on mine that you have to hit. So like me as the GP, the general partner, will get 10% of the profit, and then the investors will get 90% of the profit. Obviously, how much of that 90% they get depends on how much money they put into the pot.
Sure.
And the investors have to get a certain return first, and that depends on the level of investment they put in. So obviously, you put more money into it, you're going to get a higher return on that first one. So that goes there, and then it goes into the second pool, right, or the second hurdle you have to go into, and then that's with once they get their money back, basically. So they have to jump that hurdle every single year, and then that second pool will continue to fill up until they've gotten a full return on their investment plus the hurdle,
Preferred.
the first one. Yeah.
Okay.
And then on the third one, right, then it's just a revenue split. So it'll be, again, depending on how much money they've invested, 70-30 or 90-10, whatever type of thing. And obviously every waterfall syndication is going to be a little bit different, but that's how it's set up for us right now.
Yeah. Okay. So do you have investors in the deal? Is this, what type of offering is it? or did you pay cash for it yourself?
I have investors to pay for the land itself.
Okay.
So I've
So
raised
that's
in total about
okay.
$450,000 for it. And then, well, I mean, technically I've raised 750,000, but that was just to get the deal rolling. He wants
Yeah.
half of his investment back,
Yeah.
where he was just to get it going. But that's where it's at right now. I put a pause on raising capital until I figure out the government situation.
Sure.
Once I know, okay, look, I'll make it work regardless of what's happening. But my goal, I got to figure out which route I'm taking. Do
For
I
sure.
need to take the boutique hotel route, or am I going to be taking the 200 tents type
Yeah.
of route
Yeah.
on this? It just depends on what I can do, how I can skirt around things
Yeah.
to make the deal work. And so once I have that nailed down, then I'll be going heavily back into capitalism.
I get the question is then, so the initial capital that you have is not syndicated. It's really just like, hey, it's a partnership type deal until you actually have the plan in place. Is that correct?
Until the
Yeah.
syndication is like,
Okay.
okay, this is
Okay.
full out, then they go into the
Yeah.
syndication.
Yeah.
But
Yeah.
yeah, as of right now, it's just like, hey, thanks for
Yeah.
your money. We'll
Got
get
it.
this deal working.
Yeah. The reason I asked, because I didn't want to talk about the returns if it was like a 506B that you had already launched and it's like a private deal where
No.
you're not supposed to talk about it. So since it's not launched, then I want to talk more about the waterfall structure that you have envisioned, because so it sounds like, again, if you're listening and you don't know what a waterfall return profile is, maybe I should do another episode on that just because I've been talking about this. But it sounds like you're structuring it as you have a preferred return, right?
Mhm.
You have a 10% promote to you, the GP,
Right.
meaning that regardless, like you're going to get, as long as you hit the numbers, you're getting 10% of the return for putting the whole thing together and structuring it. That's just your promote on the deal. But the pref is set up to where you're paying that back no matter what. First, the investors are getting their pref before you ever get any of your promote, correct?
So it's set up to where it's for the profit. So it's just whatever the profit is. So if there's $1 million in profit, 900,000 goes to them, 100,000 goes to me.
Got it. Okay. So there's no preferred return until you hit a hurdle. So what are the hurdles based on? The first one is 90-10. The second one is once I return all your capital on an ongoing basis from that 90-10 split, then it switches.
Yes, and then it switches to they'll still always have to. It'll still be the 90-10 until they get their preferred return, which is somewhere between like 8 and 12%. I'm trying to remember off
Okay.
the top of my
Okay.
head what it is.
Yeah. Yeah. Yeah.
And then yeah, for the last thing, obviously, like I said, 10. Sometimes it's like 70-30, 75-25, and 80-20.
Okay.
I believe
So yeah, you can,
is
yeah.
for the third tier.
All right. So yeah, you're structuring that. I just didn't know what metric you were using to what hurdle rate it was. A lot of people use IRR. It's like once we hit a, 10% IRR, we're going to change over to, I get 50-50, right? We're going to split. So it sounds like once you return all the capital, that's when it's your trigger for you to go into the next phase of waterfall. That's awesome, man. I mean, that project sounds awesome. It sounds like, one thing I love about the vacation rentals and the whole setup is, one, it's like it's so much fun to go to those things, and it's like, so now you have a place to go. I love that aspect of it, but it's also a very cool project. So like I've looked at very similar things here locally. There's been like 60-acre tracts on waterfront that I've been looking at buying. Water was an issue, streets were an issue, challenges, like all the things. But I've like gone down that road, and so the fact that you're doing it is super cool, man. I want to know how that thing works out for you, and hope that you get the most units you possibly can to make an awesome venue that people can go to. Do you have a preference where are you like, I would love to have a boutique hotel, or is it like your vision is more along the lines of the tents?
I'm open to either, but really the vision started off with being a glamping project, and I think I'd like it to be with that. I mean, they're both fun. Like I plan on going into hotels eventually anyway, but I'm kind of more leaning, I guess, towards the glamping because that's, like I said, there's just a window of opportunity. You have to do it where it's like in your national park, how I explained earlier, right? I go through 900 markets and this and that. I went through a similar process with that.
Yeah.
On figuring out where to go for glamping, but I only had like 50 or something like that in my list to go off of great places to do this at, just because I'm not an expert in every single place you could possibly do a glamping resort. So I'm going mostly off of like state and national parks and, which side of the park you're on and things like that. I only narrowed it down to like two markets that were feasible for something like this. And the Great Smoky Mountains was easily the clear winner in this case. So, like I said, that window of opportunity for the glamping is closing, at least for resorts of this scale.
Yeah. Yeah. Very cool, man. That's I don't know. I like projects like that personally, just because I've looked at them as well. So, all right, in your investing career, right? Like, what is this one of the biggest challenges that you're facing now? Is dealing with this type of issue, or have there been other issues that you've had to deal with building up your portfolio?
Oh, there's been issues all along the way. This isn't a new thing.
Okay, so how do you deal with them, and what's been some of the ones you've had to overcome?
So this is the glamping project is the most recent one, but once before that, it was in like 2022, I believe. I had a couple investors bought some houses, and at that time I bought some houses right when the quote Airbnb bust was happening, right? So Airbnb, the summer release screwed everything up for everybody. People went from being fully booked up or getting bookings pretty regularly to being dead. That's because they introduced categories and it wasn't a smooth rollout. So they were putting people like in New York kind of thing and putting the category of like beachfront properties, and surfing categories. And so people click categories and it's just taking the random places and the conversion rates were super low for everybody. And it was just a terrible rollout. And so I had to figure out what to do with that. So I like fasted and prayed and did all these things to help me figure out what the heck am I going to be doing here. And I ended up making a few changes with it. So I had to, one of the things they did is they removed titles from their listings. And that was one of the things I would do. So like, for example, on the first property I bought in Gatlinburg has a private fishing pond. So I'd say 10 minutes to Gatlinburg, private fishing pond.
Yeah.
And that drew in a ton of people. Well, now that was gone. It just showed a picture of the cabin. Didn't say why it was special, type of thing. And that was the same thing with everybody. And so I said, okay, what am I going to do about this? And I just did research, like I said, did a whole bunch of other things and figured out, okay, the best way to do this is actually just to make a new cover photo with those words in it. And that's what I did. And that's now the new standard that I have on all of my listings is that it's now a collage of 3 or 4 photos type of thing. And then it'll say like, what makes this unique compared to everybody else? And it really stands out from everybody else. I took the old phone book trick where, back in the day, if you want to stand out, you put a white border around your company, and that made you stand out from all the other companies in a phone book. So basically I just did that kind of a thing. I at the time people were complaining about cleaning fees. So I just said, no cleaning fees and restructured my pricing strategy with that. And so I just did a number of things like that. It really turned the business around because it went from, making a certain amount of money each month to just like suddenly being slashed in half type of thing. And that wasn't obviously sustainable for me. And so when I did that, these homes didn't do well initially. And so it's been but I did that, recovered everything. And that's just one example, but there are so many examples I could give about having to adapt and pivot, in this industry for the last 5 years.
Yeah. It's awesome. It's one of those things. And I heard you talking about it with the attorneys and the people that you are working with on that other project. You're like, it's not, I can't, it's like, how can I? Like, there's a solution. Let's go find it. And we're going to work through this and it's going to happen. So yeah, I also appreciate that approach to it. And that's the only way really that you move forward in real estate in general. It's just like, okay, here's a problem. I got to go solve it. So good for you. What are you seeing in the future? Like you got this one project, right? 5-10 years out, what are you looking to do? You buying hotels? Is that what I heard you say?
Yeah. So I think what I'll do is I'll turn right now, my vacation rental portfolio is like a 1-to-1 type of thing. I think I'll eventually turn that into a fund.
Okay.
and just say, and do it that way and really focus on that. Maybe doing franchising with it as well. And turn that into a much bigger thing. But there's numerous things I want to do. Hotels is one of them. Maybe condo hotels, and then traditional hotels and resorts, and then also I'd love to do a theme park actually one day.
Ah, nice.
As well.
That's very cool. Yeah, I had a coach a long time ago, and he's like, "What do you like doing?" I was like, "I love sports and real estate." And he was like, "Once you have a sports themed based, like extreme sports." He's like, have a hotel where people can come base jump off the roof and at the same time, climb through or whatever. I was like, it's a great idea, man. Hasn't happened yet, but I like that idea. Do you mentioned funds in Europe and Utah, Bridger Pennington?
I know of Bridger.
Okay. Yeah. I didn't know if you had joined his group in order to launch a fund or to learn about funds or whatnot, but he's in your neck of the woods, man. Mm-hmm. So, well, hey, it's been good catching up. Again, from the very jump of this conversation, you are dropping knowledge. Hey, here's how I do it. Here's how it works. So I appreciate that a lot, because I'm sitting over here. I've got a whole pad of notes that I can easily go to each of these platforms and things that you mentioned. And now I can go straight to them and be like, okay, is this something that I would ever implement and use? And how could I piece this together and make a business out of it? So again, really appreciate you jumping on, sharing your information about your business, what you're working on, and that sort of thing. Ton of knowledge that you have there. If you are interested, you're looking to invest, or you want to reach out to Drew directly, all his contact info is going to be in the show notes, and you can do that and learn more about what he's working on and see if you want to invest in some of the projects that he's got going on. So thanks again, man, jumping on.
Thank you for having me.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.